Right, we're talking about investment trust charges today, not so much the share dealing costs, but actually how much the funds themselves cost. There are two types of costs in buying investment trusts: the fees you pay an online stockbroker to buy their shares, and the investment trust running costs that shareholders pay. We previously looked at share dealing charges, so it's time to say more about investment trust expenses. Investment trusts incur several regular costs. The biggest is the annual management charge paid to the fund manager in charge of their investments. There are other fees, such as paying auditors to vet the accounts and the trust directors who sit on its board and run the trust. These fees make up an overall annual ongoing charge, which is expressed as a percentage of the trust's investments. Typically, ongoing charges vary from 0.4% to 3% a year, depending on the size of the trust and how specialist its investments are. Costs eat into investor returns, so shareholders have an interest in keeping them low. It's worth saying more about the fund manager charge because it's a big item. This pays the fund manager but does not cover the costs the trust incurs from the manager's trading of assets. The base fee is calculated as a percentage of the trust's money, ranging from 0.25 percentage point to 2% a year. The percentage applies to the value of the trust's investments, either their net asset value excluding debt or gross asset value including debt. It can also be applied to the total value of the trust shares or market capitalisation. This can be more or less than the net or gross asset values, depending on how highly rated the shares are. The bigger a trust gets, the more the fund manager gets paid. To stop this getting out of hand, many trusts use tiered fees, with the manager's percentage falling as the trust grows. In addition, some investment trusts pay the fund manager a performance fee if investor returns beat a stock market index or other benchmark. Some investors like performance fees because they reward the fund manager for doing a good job. Others, including me, think they make investment trusts unnecessarily complicated. Either way, if a performance fee exists, it should be accompanied by a slightly lower base fee.